All right, so a few things happen that you don't know where and when they could happen. In any of your pre-market prep, you're going to have to let it play out. And so it was becoming clear that there was a area around 83 that the market was holding as support. Some point they were going to break out, and they kind of had an opportunity there and head faked and got above 85, which was some big buying that they got through, but then crossed over. And then you look over at the NASDAQ, which is this chart over here, and you could see them holding an area. And you could also see, or should see, that why they're holding this area. These red little boxes, rectangles, are bigger sell market orders, but they're trying to pepper a green line, which is defined as an iceberg. There's more buying, it's green, and then meets the eye, therefore an iceberg. At some point, they are going to get through it. And when they go, generally, they're going to follow through. And so what they needed to do is they needed to get through there for the S&Ps to get through there. You weren't going to have the S&Ps break out until the NASDAQ was able to take out this buy iceberg. So it was important to notice this in here and now in real time, and not, oh, by the way, what happened at, evens in the NASDAQ? Why did they, really start to break out with some momentum? You have to know that before it happens to anticipate it in order to sharpen your predictive skills. So if you're looking to play it from the short side in the ES here, you had a correlation that was important to be able to track and kind of an if-when moment. Now, as often happens, when you come on up, what you do is you generally shake out the weak shorts in here that are looking for the breakout. And they say, holy SHIT, there's less of them when it makes this next attempt. And this next attempt just has a higher probability to finally break those evens and follow through to the downside. So you could see me circling it in real time. Let me play it again. And right there, I'm talking about the importance of going through that level and how it'll pull the ES down once it does. And I'm highlighting the rectangle or the congestion box, showing where the top and the bottoms of them are. And so right in here, you're going to see them finally get through the big iceberg buyer and not never really look back, and broke 20 plus points in the NASDAQ. And I paused it, and you could see the ES coming off along with it. And so as soon as the NASDAQ was finally able to get over that hill or that mountain, there was nothing on the other side to stop it from continuing to break. See how they both broke at the same time? Anticipating that was the probability right in here, at least to keep yourself from being long, staying long, and being stuck as this market ran away. The first thing is to stay off the wrong side. And a lot of people just want to find great levels and be long at even and sell it at 50. Not understand that you just can't lay bids to get long or offers to get short. And you want to understand you could be on the wrong side. So it all comes down to location. So when you get this market to finally get through an area and then just follow through, going through the 83, 84 area was not a coincidence. So then if we go even a little deeper into that, and pause it a second, and you back away and say, well, what was also important for the S&Ps to follow through to the downside? We like our laser to be green. We want to see more longs than shorts. So if I play it, you see longs getting stuck and longer. You could see this being 2-1, 67 to 28. And then another important part of this story is this number, the total amount of bids, gets below 1,000, which starts to weaken the case for buyers to be able to hold up price. There's not as many of them. Boom, it gets below 1,000, 800. And so it's just, you got everything lining up for this thing's about to break up here through a level that could follow through to the downside. You got more longs than shorts. You don't have too many buyers holding it up. So you got a path of least resistance to the downside. And then it goes down, and it's no longer as random as it might have been in the past. It doesn't feel like a good guess. And you could at least give yourself a really good chance of staying off the wrong side, being in trouble and having to chase this thing down with losers beginning to mount. It doesn't mean that it's terribly easy to get short earlier, like in this sequence. I'm going to roll this thing back in around 8:42. There was an interesting moment where they had a chance to blow through the downside, and they quickly came back up through it. And I think it was in here. Let me back it up. So it gets through this iceberg right there. Okay. And there's some decent buyers in here at 84 and 83. And so it starts to have a nice OPP. It does break, all right, for an opportunity to be short a little bit above, but you got to know where you're going to get out before you get in. Where, if I pause this, where are you wrong if it fails to go through? You can't say I'm wrong at 89.90. That's too late. You have to have an idea of what we call a crossover. If it gets back above this iceberg and starts to show a long down up bar, it puts yourself in a position to know sooner rather than later that your timing is off. So you could either scratch the trade, you could cut the loser, but you can't just hold on to hope that, but Anthony, this is a green laser and the OPP is 2-1. But you get yourself stuck with too many other people. And then it does shift to red. Are you still short? Because you've been told right in here that you're probably too early. And now you got to make that decision 3 points worse. So you've got to put yourself in a position to say, you know, I'm going to be short. However, if it does what, am I wrong? And how could I use that as an objective reason to get me out instead of my emotions getting me out or what I feel? You got to trade what you see, not what you think. But if you're not watching other markets, you're missing a very important piece to this puzzle of price prediction.